Hello viewers, good morning, and once again this discussion series on mock paper financial accounting of ACCA basic level. Today I will continue with question number 17. At 30 June 2015, a company's allowance for receivable was 39,000. At 30 June 2016, trade receivables total 517,000. It was decided to write off debts totaling 37,000. The receivable allowance was to be adjusted to an amount equivalent to 5% of the trade receivables based on past events. What figure should appear in the statement of profit or loss for the year ended 30 June 2016? In this question, there are two perspectives. One, the irrecoverable debts. Straight away they are saying that it was decided to write off debts totaling 37,000. This is one aspect. The other aspect is the impact related to the changes in the allowances. That is the second aspect. So let's what we do now. Let's open an account for allowances. The opening balance allowance as per question 39,000. You should know that allowance is a credit balance. By nature it's a credit balance, and then we also need to open a T account for receivable. So when you open a T account for receivable, the opening balance given in the question is 517,000. Now what they say, at 30 June 2003, trade receivables total 517,000. It was decided to write off debts totaling 37,000. So there is irrecoverable debts. Irrecoverable debts 37,000, and which I have to take it to profit and loss account. Irrecoverable debts 37,000. And also please note one more thing, the year end. The year end is, when is the year end actually? 30 June 2016. That is the year end. 30 June 2016 is the year end. So the beginning is 30 June 2015 or 1st July 2015. Now the receivable allowance was to be adjusted to an amount equivalent to 5% of the trade receivables based on past event. Now what we have to do now, we need to find out the closing balance here. 517,000, and then what is the balancing figure? Let's work out. 517,000 minus 37,000, which is 480,000. So this is the carried forward balance. Now to calculate allowance, they say 5% of this balance. So that is 480,000. Students need to be careful not to confuse with taking the calculation from this number. What I am trying to mean, this number. This is the balance given, opening balance prior to adjusting the recoverable debts. To calculate the provision, we should always take the balance after any adjustments took place during the period. So the 5% of this answer into 5% will be 24,000. So this 24,000 will be my closing balance. So when I have this closing balance, then I have a balancing figure here. So that is the 39,000 minus 24,000. 39,000 minus 24,000, which is 15,000. So this 15,000 is now here. This answer is known as. This is known as, or rather, not this actually. This one we call it over provision, and this difference is a benefit, is a gain, and this gain will be reported to profit and loss account as an income. So here we call it over provision 15,000. This is an expense, this is an income. So if this answer is reporting in plus, this should be minus. So the net impact in the profit and loss account will be the difference between these two, which is 37 minus 15,000, that is 22,000. So to go back to the question, the answer will be, what figure should appear in the statement of profit or loss for the year ended 30 June 2016 for these items will be 22,000. The next question. Question number 18. The total of the list of balances in B Company's payable ledger 438,000 at 30 June 2016. So whereas this balance did not agree with B Company's payable ledger control account balance, the following errors were discovered. A contra entry of 980 was recorded in the payables ledger control account but not in the payables ledger. A total of the purchase returns day book was undercast by 1,000. An invoice of 4,344 was posted to the supplies account as 4434. What amount should be reported in the statement of financial position as accounts payable at 30 June 2016? Please remember what we have. What we have is that two items. One is so question number 18 related to payables control account. So here we need to have one account called payable control account. Then we also need to have payable list balances. So what we will now try to do is that the total of the list of balances in the payable ledger is 438,900. So that is 438,900. That's the broad, I'm sorry, not here. It should be here. So that is 438,900. That's 438,900, and then this balance did not agree with the B Company's payable ledger control account balance. The following errors were discovered. A contra entry of 980 was recorded in the payables ledger control account, but not in the payables ledger. So what we need to do is now, see, a contra entry is an offset against the receivable, so we should debit that 980 here. It's a contra. So that's one thing. Second one, the total of the purchase returns day book was undercast by 1,000. Now the purchase returns will reflect in the control account. This will not necessarily come and have an impact on the list of, because it's the total, it's not individual line item, so that we should adjust for the control account only. So here in my control account they say it's an undercast. So when the purchase return we should record as a debit, and if it is undercast, that means that amount is less, so we have to increase by that amount. So 1000 purchase return. So the next item, an invoice of 4,344 was posted to the supplies account as 4434. So let's find out what has happened is the correct amount is 4344. Reported amount $4434. So we need to find out the difference in this. $4344 minus 4434, 90. Now they have suppliers, purchases, their correct amount is less, but the report amount is more. So what we then have to do is we need to debit this. So correction of error. So I guess these are the three entries. So the question is, what amount should Veli report in the statement of financial position as accounts payable at 30 June? So the correct answer will be if you balance this, you will get it. So 438,900 minus 90 and minus 980. So 437,830. So you have the answer. Answer is the fourth one. So the next question, according to IAS 2 inventories, which two of the following costs should be included in valuing the inventories of a manufacturing company? Carriage inwards, obviously we have to take it. We will not take the carriage outwards. And we also depreciation of factory plant, we should take it. General administrative overheads, should not be taken. So answer will be carriage inwards and depreciation of factory plant. With this, I will stop my discussion on these questions. In my next recording, I'll continue with question number 20. Thank you so much.